Hi, in this video I will cover the 5 stocks which will benefit from Mr. Joe Biden presidencies. As you can see, it was in his agenda to the Biden plan to build a modern, sustainable infrastructure, and basically he is also very much focused on the clean energy futures. And the target date which he has set for net zero emissions is no later than the 2050, and that's a pretty big initiatives. In the recently, the CNN Politics also covered that a crumbling infrastructure put these Biden cabinet positions in the spotlight, right? And it covers that as well. So without further delay, let's get started. What are those 5 stocks, in my opinion, which could benefit from it? So let's get started. The very first one is no other than the Caterpillar. The Caterpillar, basically, we know it supplies the machineries, plant and all, and it's pretty cyclic in nature, but because of this I think it has a good chance the very own American stock will get benefit. And good thing about the Caterpillar is we'll go into the financials, but this is the global presence stocks. So it's presence in the Asian market, for example, let's say India. I went onto the websites and all, and as we know, these are especially the South Asian market, like India is a booming economy. So not only from the American perspective, but from that perspective also seems like a good candidate. So if I see from the valuation perspective, which you can see on the screen, the PE looks quite high, right? It's 30 at the moment. But good thing is this is the dividend paying stock. It's 2.31% dividend, which makes the annual of $4.12. The dividend. So here, just for the fun, what I have also showing here, I take the 5-year, the chart for the Caterpillar, and compare with the S&P 500. So rather than if you invest the same dollar amount in S&P 500 and the same amount in the Caterpillar, so the Caterpillar is way up, seems like a twice of up as per the S&P. So the red is SPX, and then this is the Caterpillar. So Caterpillar goes up and down, right? In 2018 it's way up, and then it's pretty in the 2020 it's come down, but it quickly goes up. But if you can see from this year, it's really did very well. And but if we see the overall it does very well as compared to the broad-based index. So from that perspective as well, looks it's a good investment. And this is a pretty much shows the whole the financial, the liquidity and the profitable ratios. So from the short-term liquidity perspective, if I see from the 2016 to 2019 financial year-end statements, the liquidity is quite good. So pretty much for every $1 they have to cover as expense, they have same the $1, but even more than $1 if I see the current expense, like $1.50. So that's pretty good. From the gross profit margin perspective, which is, we know, the revenue minus cost, right, is our gross profit, and gross profit over revenue is the gross profit margin. If you don't know how to calculate, feel free to check it out in my channel. I have covered these as well. So it's pretty good. It's pretty consistent around. It's increasing from, if I compare from the 2016 to 2019, but from the last 2 years comparison. But the good thing, the bottom line is that the after tax even return on equities is improved a lot in last 2 years. If you look at this, 44 and 42%. So that's quite interesting. And the profit margin is also consistent, like 11% in the last 2 years. Other than that, one thing I also want to point it out, when I was doing the research for this stock, I also noticed this is not just the traditional the stock which provide the machineries and global presence as well. They are invested heavily into the robotic sector as well, and they also bought the company as well. right, the marble robots. So what now this is, so rather than as you can see this person and this machine, so basically this machine you just place it and then just put on the iPad or some instruction, and then the machine does the job itself. It's no need a human operator, and that's a game changer, especially if you want to, let's say, go and put the machine in some big area. We say, okay, let's dig a hole. So the margin of error and all those labor cost and improvement, because the construction budgets can be so high, but with this kind of a robotics technology where the error is less because of the less human, and also saving life of human, because maybe many the construction side is sometimes is not very human friendly as well, so that humans can from the far reach, they can put the instruction and machine can do the job. So that's the really next level of machines they are working, and some are in action as well. So that's a quite good as well. So there are some other companies, but since they have a background, so also want to share that, okay, so they are doing some good improvement as innovative technology as well. So from that perspective as well, I think this is a good stock as well. So yeah, if you're new to the channel, feel free to subscribe, and please give a thumbs up if you like these kind of video. I really appreciate whether you're new or old subscriber of the channel. If you can give a thumbs up, it's really motivates me to make this kind of video. And if I see from the analyst what expectation is, so the pretty much what expectation is around high of 220 this shares. So so as per the next year as well. So I think maybe the share price can go by 220, but yeah. So that's on the first stock. So the next one in the list is the Alpha. The ticker is Alpha, and so basically Apharia is the this is the cannabis stock. So there was many 2,003 years ago, so many of these stocks which go the roof high and come back, but I think this is still a good stock as well. And this company, basically what it does, it's offer pharmaceutical grade medicine. So that's one of the reason I like this. And also the another thing is they not only just processes but they also does cultivate, processes, produces, market, distribute, and sells. So pretty much the whole channel would they does, not only in Canada but internationally as well, right? So that's one good thing I like about this company as compared to, if I compare to the another company as well, right? So and recently this company did the merger with Tilray. So this seems like, and now they are one of the largest cannabis company in the world. So this cannabis, I think, is still a new industry, and it's not very old. So but my expectation here is, as what the new president from this perspective is just the opinion that he will put more I think this industry will flourish under the new leadership. And in Canada, most of the company we know are there for this. So I think this industry should be good for the long term. But let's see. So this is seems like they're buying some growth as well by buying this company. And if I see the price is not that expensive for this, right? Right now is the market cap of 2.2 billion. So it's a cheaper stock. It's not making any profit. That's so the good thing is if you buy and it goes, let's say 70 or 700 in few years, it's already a 10x or 100x stocks, right? Because of this low price in nature. If I quickly go over the income statement, you can easily see the earning doubles or more than doubles in 2018 to 19, and 220 is just blowing away, right? So it's a huge sales growth, as you can easily see here. Same thing in the gross income or profit margins. It's dropped, but it's increased a lot into 2020. It's all green, right? So that's pretty good. So okay, so I think enough on this, talking on this one. If I see the price target is going around $12. It's $8.99 right now. The share price is even below that, the average. So seems like this can be a good, not only from under his new presidency, but from the long-term perspective. So let me know what you think on this industry overall. But I think the overall, if we leave the stock, but the industry should be good from the long-term perspective, and for sure this stock will does well. This seems like as you can see how the sales and other is growing, and the gross income is growing as well. Yeah, let me know if you own any of these stocks as well, and in the comments, so we know what's your feedback on that. Okay, the next one is, as you can see, the one to the next, I will focus more on the clean energy. So this is a very strong case for the top energy dividend stock, right? You might find that that this is only giving like a 2 point some percentage, as you can see in the next, we'll see the next slide in terms of the dividend. But this is pretty much owns a very big portfolio, and they have a very global presence in terms of renewable energy, as you can see those country names here, right? Especially on the India, China, and North America, pretty much cover the whole, and the Brazil, right, as well. And the company right now generate this 19,000 megawatts, right, and then so that's, but it's so attractive that it's I think it's a long-term player. I believe this stock as will be. So this especially in the renewable energy, right, is the future of the energy production. And it also has solar and wind. Already is the most cost effective bulk source of electric power, right? And the countries and the large companies around the world have committed to reduce the carbon emissions, which will boost the demand for the renewable energy. So that's what my thought behind this, my opinion, right? Because not only Mr. Biden, but because of all the big countries' commitment towards the zero emissions, so which will boost these kind of stocks. Okay. So this shows the financial, as I was saying, this is companies also paying some dividend, which is the annual dividend $1.157, and the share is not that expensive as well, as the year target is $37, right? And right now it's just a little bit over, it beat its target. So right now it's already $42.42. If I see the revenue and compare it with the net earning, seems like the revenue increased a lot on this stock, but the earning is not that positive, which really I didn't like that much. And especially if I do compare it with the operating cash flow with the capital expenditure, one of the reason is because they need to maybe invest a lot in the plant and equipment, which clearly shows here, and they are in very early stage. But once they have that setup, I believe that should convert more into the free cash flow a lot, because right now the free cash flow, operating cash flow is very minor in blue, but the most of their investment is going toward the plant and equipment, right? So which clearly can be seen here. Other thing, if you can see, the revenue growth is quite up and down, and right now it's year over year is decreasing. But the good thing on that one is, if I convert that to from the gross profit margin perspective, it's very good. It's close to 65%. So that's amazing gross profit margin. So let's see what the analyst predict for this pricing. So if I see from the price perspective, the analyst price is, as average is 40 or 40. We already see the share price is going higher than that, and it also clearly reflect in the price over sales, because if I see the historical from last 4 to 6 years, it should be less than 2, but it's right now is even going 3 times of its sales the price, which is quite higher. But if I compare it with the price of a book ratio, seems like this the share is still undervalued. It's only for any $1 of the market value, the is only 0.4, right? So the share price is already discounted that, but we cannot just see from that price to book perspective, but we need to see from overall. I believe if I see, in my opinion, this share price is a little bit higher at the moment. But if someone maybe before can buy, let's see if it can dip a little bit, or if somebody can think maybe is good from the very long term perspective and don't mind a little dip, that's a different story. Yeah, so it's all depend upon the personal opinion, right? Okay, so that's enough on this third stock. Okay, let's go to the next one. The next one is the Canadian Solar. In the US is ticker is CSIQ as well. This is traded in Nasdaq as well. There was one more. This is the bigger one as well, First Solar. But this is one I didn't put this one. The reason that is this is way expensive right now is based on its valuation. So this is a good ticker as well, but right now it's very expensive. And I find a similar one. This is quite good as well. And if you see from 1 year price chart, this is the 134% up from the 1 year, and the PE of this is only 15, where the earning is coming $3.45, and the price is only $51 right now. So if you can see from that, and it has also might have a big runway to go, because right now the company is only $2.9 billion, right? If I see another reason I picked this one is look at the P price over sales. Right now the sales is even higher than it's what the price is in the market, so still is 10 cents less, right? The return on equity is 13%. So that's pretty good as well. So let's see the bigger capital structure for this stock. If I see overall capital structure, right, the return on equity for the last trailing 12 months is 13%, and the return on investment capital is almost 9%, which is good. Look at the revenue growth. Each quarter is 20% revenue growth. So that's on this stock as well. So let's see what's the analyst expectations on this stock as well. So if I see the analyst expectations of $46.86, right? And so right now the price is going a little bit, that's for this year, but but it can, I think it still can go over the higher as well because of the new presidencies. The share price is already going higher than that right now, as we can already see. So that's what so far. If you notice in this series, I haven't did my own stock valuation, because last time this is just covering 5 stocks. If I start doing the valuation method first, it will take like 2 hours easily to go deep down into it. But if you want me to cover any very deep down, feel free to comment. But I think this pretty much what it shows as well. And the second thing is, I have already shared in the last video the spreadsheet, right, where you can easily plug in the number and get the intrinsic value. Some of these the tickers which we have seen here is already shown. It's quite expensive, and I already pointed out as well. But this might get good appreciation in the next 2021 or during Mr. Biden presidency, right? So that's just that's the opinion on this stock. And the last, not the least, the fifth one, I think this no-brainer is Tesla. I don't want to go into too deep as well. For sure, on the valuation perspective, this stocks beats all, and it's going as a crazy. But I believe because of this zero emissions and clean energy perspective and EV side as well, Mr. Biden will continue support, and this is another good home run stock as well. So for sure, this is the last the fifth one. So none of this stock is ranked that one is the good or the fifth is the bad. All are like equally ranking, and this is just to show as the list. Okay, so that's it from my list. Please just subscribe to the channel if you like, and if you haven't give a thumbs up, please give a thumbs up as well. And happy new year, and see you soon in the next video soon. Bye for now, and do comment your favorite stock as well. Thanks for watching. Bye for now.